Here we are, at it again for lunch at the market. Today we're looking at those names that haven't seen a bounce between yesterday and today's positive price action. So far so good on today's rally. We'll see if we can hold it into the close. Many companies begin to report better and better numbers, and we're starting to hear chatter out of Washington that they're going to freeze spending. Wow, that would be nice. Usually the Democrats are known as the tax and spend party, and they were certainly living up to that so far. It'll be nice to see some restraint out of them going forward. Speaking of restraint, we'll take an apology for going a little nuts regarding his assault on the wealthy, higher stock prices, banks, investment firms, and even profits. We actually need all of those to be doing well in order to get our economy back on track. We cannot prop up the economy with supply side if demand continues to decline. We'll need the capital markets to increase so that wealthier people can cash out of it and spend it on real goods. Joe Terranova has mentioned this quite a few times in fast money as a precursor to November elections. We'll see if we can finally get the idea back on track. So, who are your laggards for today and what we think is still okay to be bought? Get out your pen and pencil or open up your notepad on your iPhone, and here we go. TRIT, HRBN, JST, A1, BX, BCS, SAY, X, MRO, and SYNA. Most of these names have been previously covered on other segments of Lunch in the Market, so we'll not go into a huge amount of detail on the names we've just covered like we usually do because that work has already been done. If you want to check out those names, you can go to our YouTube channel and look through the past videos for stocks that you're looking for. All you have to do is find our past videos is to enter the MO Financial, just like you would on our Twitter page, and then the ticker symbol that you're looking for, and our videos will come up. We just tried it with several different stocks and it worked just fine for each one. So again, if you want us to cover a particular company on Lunch of the Markets, just mention us on Twitter with the ticker symbol, and we'll do that work for you and put it in the segment. Before we go, we just want to highlight Synaptics, symbol SYNA. That was the last name on our list of companies that hasn't moved a ton either today or tomorrow, and we think it's really worth a good look at. We're going to use our disclaimer that we did go in there and buy it on the intraday dip today at $25.50. But even at $26, you have quite a bit of room just to get back to $30, nearly 20%, and the 52-week high is $40. The company trades with a forward PE of 11.65. That's with having a current PE of 20. So you're looking at much better earnings going forward. In fact, if you look at the PEG ratio, that's the ration of PE dividend divided by growth, you get 0.65. Anytime you can buy stock for less than 1 times growth rate that is this solid, you should be happy to do so. Just to give you an idea regarding this metric, the PEG ratio, that is, Apple trades with a PEG of 1.4, and that indicates that you're paying nearly 1.5 growth rate for Apple's earnings. Most of us feel that today we'll know a whole lot more regarding Apple's growth after we get a look at the product they're announcing this week. Apple's PE is 33 with a forward of 21.95. So you're paying more for Apple's growth than you would have to from Synaptics. Well, guess who makes a touchscreen for Apple's touchscreen devices as well as other makers of touchscreen devices? You're right if you said SYNA. They are leveraged to the growth of Apple, and if they don't have the exact same growth numbers as Apple, you can tell me that touchscreens will become less popular in devices than they are right now. I'll listen to why SYNA will not grow in the future. Synaptics actually develops and supplies custom-designed human interface systems. If you want a better look at the company, you can always get to the Fairmont Hotel in San Francisco, California, February 9th for Thomas Wiesel's Partners Annual Technology and Telecom Conference. We would be remiss if we didn't point out Western Digital Corp, symbol WDC, as a name you really need to take a look at, as it's down from $46.66. It looks like $41 is a pretty good support. It was held there the last few days, and this company is a very high growth industry of storage. A reminder to be nimble though. Do not get complacent, as there's enough fear out there, not to mention massive headline risk, that you may continue to see more pullbacks going forward. You're going to want to look at shortening your time frames on stocks that were working for you. Once you get up 20%, take them off the table, and always have cash on hand, so that when the names on your shopping list get attractive, you have dry powder to put to use. Hopefully, you took your VXX hedge off yesterday when the VIX is done going through the roof. Look to buy the VXX back at lower levels if volatility continues to come in, especially when the VIX gets under 20. Thanks for tuning in, and we'll see you tomorrow.